Hello, everybody. So what an unbelievable market. This video entitled, We're Bouncing Right Back. You should not get shaken out. The only job that we have as investors in any Bitcoin-related asset is to not get shaken out. So yesterday, exactly at this hour, I can't make this up, yesterday, exactly at this time, Bitcoin was 83,900. Strategy was $157 a share. IBIT was crashing. Strategy was crashing even more. It's 10:47 a.m. as I record this. Yeah, I can't make this up. It was at 10:41 a.m. yesterday. So there you go. A screenshot, 7 minutes apart, 24 hours. Okay, everything was so red, so grim. People were trying to find a reason as to why everything was dropping. It seems like the internet settled on it's the carry trade. It was dropping because of a carry trade. And even though anybody who follows any macro topics knows that the carry trade has been a macro topic for at least 3 years now, and the carry trade has been unwinding for years, and there's nothing new except the headline number of the 1%. But everybody was talking about that yesterday. It's all a narrative. It's nothing new. The carry trade is nothing new. Anyways, today we have a new narrative. Today the narrative is the SAVE Act and $1,000 for each child. That's the narrative of the day. And so the market just moved on. And so what's going on? Well, strategy is at 181. So think about that. 181, and we're at 157 yesterday. Think about that bounce back. You know, same for the iShares IBIT Trust. Same, plus 6%. Of course, we are a little lagging IBIT today, but we greatly outperformed yesterday. You may remember yesterday how much we outperformed. I was very impressed by how much we outperformed yesterday. So what does that mean? And Bitcoin, of course, is at 91,000. As I record this, Bitcoin is at 91,000. So what does this all mean? Bitcoin dropped to 83K. And it's back at 91 in a 24-hour period. What that means is that our only job is to not get shaken out. Our only job is to not get shaken out. And the narrative of saying, "Oh, it's the Japanese yields," that narrative is just a narrative, because in fact, if you look under the hood, I maintain that multi-party is right, because when you look at the pattern, it's exactly what it is. It's just leverage longs getting liquidated. People who were betting 50 to 1, 100 to 1 got liquidated, and it's just one player, or maybe multiple player, but one main exchange who shall not be named, who is triggering these cascade executions on Sunday night, right when New York goes to bed, right when the US East Coast goes to bed. On Sunday night, boom, you just drop the price, you liquidate everybody, and then a day later, we're back essentially at the levels where we were on Saturday. This screenshot from Marty Barty was the Saturday stream. We're at 91,000 on Saturday. Today's Tuesday. We are back at 90. We are back at 91,000. There you go. Right now, that's the screenshot of today. We're back at 91,000. So we just dipped to 83, so that the people who were 50x leverage got liquidated. They lost all of their money, and now we resume the bounce. That's just how it's been working for like the past 3 months. It's been like that for the past 3 months, essentially. And so that's why the title of this video, "Don't Get Shaken Out." That's your only job if you're going to invest in anything Bitcoin or Bitcoin related, like digital asset treasuries company. The job is to not get shaken out, not get wiped out, stay in the game, survive, live another day to stay in the game. That's the job. And of course, Saylor has said that multiple times, but many crypto people have said that multiple times. Bitcoin related investment and Bitcoin itself, they're 4-year or nothing investments. They're 4-year or nothing investment. Why do we say that? Because of the 4-year cycle. Historically, now they actually may be 5-year or 6-year or nothing. I mean, I think it's safe to say it could be a 6-year or nothing investment if the cycles get elongated, or maybe we don't have cycles at all, and in that case, maybe it's still, but it's still going to be a few years. It's still going to be a few years. To me, it's a good rule of thumb. It's a 4-year or nothing investment. And so if it's a 4-year or nothing investment, what does that mean? That means you can't do options. Options don't go 4 years out. So if you can't do options, that means that Bitcoin and Bitcoin-related investments are also common or nothing investment. It's the common stock or nothing, right? Because options are really risky because of time, because you can't predict when Bitcoin is going to pop. You really can't. And the truth is, all of the big influencers with millions of people, much bigger than my little PowerPoint channel, people with millions of followers, were all saying, "Oh, end of year, 150,000 Bitcoin." That's what they were all saying. Everybody was saying 150 end of year. Everybody. And of course, we all found out yet again that you can't predict when Bitcoin pops. You can't predict. So the goal is to stay in the game, to not get shaken out, not be wiped out, and believe in this asset class. If you've read the books, if you follow the Bitcoin Standard by Saifedean, if you've read that book, if you've watched the Saylor series with Breedlove, there's 20 episodes of Saylor talking about Bitcoin that were recorded in 2020. I think it was 2020 or 2021, when everybody was at home. They recorded like a 20-hour series where you can get into the weeds, into the depth of what Bitcoin really is. And if you've done that homework, you know that Bitcoin rewards the faithful. And the only job is to not get shaken out. It's literally so easy, and not go for the instant 10x, because people who go for instant 10x get liquidated. People who wanna go too fast get liquidated. So anyways, and what? So what if you don't like volatility? So what if you're scared about these big drops, right? Minus 11% yesterday. The sentiment was so bad. What if it makes you sick to your stomach? What if you don't feel good? Well, Saylor created instruments for those that can't handle the volatility. Created instruments, or it's either you can't handle the volatility, or you're going to need the money within the next 4 years. That's why he created the preferred, for those that need the money, right? Or, to use a more colorful term from Gen Z internet, love it, but it's a colorful term, lettuce hands. I like it a lot. For those with lettuce hands. So if you can't handle the volatility, there's an instrument which is the apex predator, full of the preferred, that Saylor has been talking about and that's the only instrument he talks about right now, by the way, for the past 3 or 4 months. And it's STRCH. He's been talking about that, and he even said that he wouldn't have done STRK. He said that in multiple podcasts. He wouldn't have done STRK if he had known that STRCH was like the key breakthrough. Anyways, STRCH is that instrument that they launched right in late July, and it's that instrument that is designed by design to trade at $100. And we've traded a little bit at 100. You can see well, it's too small, but you can see there's a little flat part here. That's when we were trading at 100. We had a few glorious days where the instrument was working perfectly, and then the market dumped and got into a valley of despair. But overall, STRC has done its job of being a stablecoin. It's held up so well. If you look at STRC from July 30th to today, so December 4th, end of close yesterday, you would have heard 5.5%. Your total return owning an STRC was 5.5%, and it's roughly what it is, right? It's about half a year, 5.5%. The instrument pays 10%. Like the instrument is working as he designed it, as Saylor designed it. If you look at the volatility, essentially no volatility whatsoever. It looks like a bond. And if you look at MSTR stock the common, MSTR stock the common lost how much? We lost 56% since July. We're down 56% since July. But here's the thing. If you want an asset that can multiply, you need to be willing to stomach to the downside, because an asset that cannot drop 50% in a year is also an asset that cannot go up 50% in a year. Like by design, if you want your asset to grow 50% a year, like by design, it needs to have the ability to also drop 50% a year. That's the volatility. Over the long run, the volatility is the return. The more volatile the asset, the volatility will match the return. Tends to, right? Over a long enough period of time. So STRCH outperforms during downturns, but it's also not going to do a 10x. It's also not going to do a 10x. And I know it makes people mad when I show this because a lot of people got in strategy in the $300, right? So a lot of people are like, okay, it's sitting at 170, 180. I paid $320 for it. I feel bad. Well, the key is to lengthen your time horizon. Remember what I said about 4 years or more, because I hate to show this chart, but I'll show it again. From the day that Saylor implemented the strategy, you're still up 13 times your money. 10,000 turns into 138,000 in 5 years. And that is with the epic drop that we've had in the price over the past 5 months. With that epic drop in price, we've still 13x'd. Now, granted, in July we're sitting at a 27x. It felt better, right? But we're still sitting at a 13x. And here's the thing: an asset that can drop 50% is also an asset that can go up 50%. You know, it looks nice that STRCH is flat, but over the long term, in my view, there's no way that STRCH has the returns of MSTR. At least that is my view. Anyways, hopefully that makes some sense where I'm coming at. And let me just finish this video talking about what I think is going to happen going forward. What's the plan going forward? Saylor's plan going forward? Well, I think his plan is simply to wait for a bit. I think he's going to wait for a bit. If you look at the dashboard, at the strategy dashboard, he already had it. They move fast. This team moves fast. They already added the Bitcoin, the USD reserve, right? The USD reserve with annual dividend that they owe, 21.4 months of coverage in USD. I think it's possible they build it to 24 months, so you could use the common ATM to build it to 24 months, and then I think he's done. And I think the plan is to wait for STRCH, right? STRCH is the tip of the rocket, of the Bitcoin strategy. Anyways, you see it, STRCH. The tip of the rocket is STRCH, and he raised it by 25 basis points, and we have an overcut. And whenever that happens, he will be able to raise hundreds of millions of dollars a week with STRCH. We just need to wait. That's all we need to do. We need to wait. And the more we wait, the better it's going to get, because STRCH is going to get back to 100. You can see it's walking its way up slowly because it's an instrument with low volatility. So yeah, it's going to take maybe 10 days to get back to 100, maybe 5 days, maybe in 8 days when we get that rate cut. It's going to take a few days, right? But we're going to get slowly 97, then 98, then 99, and then we'll be at 100. And once we hit 100.02 cents, boom, Saylor ATMs like a madman. And that's going to be just beautiful. And I think we're going to have a beautiful 6 months ahead, with now everybody betting that Kevin Asset is going to be the Fed chair. And you bet I'm going to call him Mr. Dove. Kevin, Mr. Dove Asset. This guy looks like a nice guy. We're going to get the rate cuts. I think we are totally going to get the rate cuts. Kevin, Mr. Dove Asset is coming. He's coming May 26th, and that's going to be beautiful. And well, I can't remember a Fed chair that I liked. I can't remember. But I think I'm going to like him a lot. So anyways, here we go. So that was the video. Not investment advice, not financial advice. This is only entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.